What is going on YouTube? The other day, I made a post about the different trading sessions that are part of a single trading day. And what I mean by this is to be a successful options trader, at least anecdotally, I have to trade the morning very, very differently than I trade the afternoon, and I trade the afternoon um, very differently than I trade the end of the day. And all of this stems around one simple concept, which I think is probably the most important part of trading options. So currently, I'm sitting in this call seen on the right. I only have 5 contracts. I'm pretty much playing with profits from the first trade of the day. I took this trade here as we broke the channel. I tweeted about it. I said, hey, look, we're probably going to consolidate and end in diagonal at the bottom. And as soon as we broke the channel, I entered the trade. And we took a nice little gain on that. But it's a very small trade because these are low conviction times. So right now I'm down 2 cents on that. I entered at 1.03. But I want to get into why this is very likely to break higher, and that all stems around that concept of what is theta gang doing? What are the market makers doing? So let's get into that. As a theta gang trader, your goal is to sell a call when you're at resistance and then have the stock to sell off, right? And what does this reflect in the implied volatility? Well, on the right here, I have a 1-minute chart pulled up with the implied volatility. On the bottom, the relative volatility, as well as the price action on the right. So I'll go to a 1-minute on both just so we can keep it the same. And this is what you'll see. So the morning starts, right? A whole day off, that makes more sense. All right, so the morning starts here, and every morning is the same. You're going to be in this high volatility state. So you look at the options price, it's very high. And this is the seller's market. So you can trade with the momentum. For the morning session, which was down after the first 30 minutes. I thought it was bullish. I waited for my call entry, but we broke low, broke real low. So right here, I was like, let's not do that. So I waited until this bearish channel was invalidated, and I started to enter into calls. Great. And oh man, this is gonna be a rant, but whatever. The tangents of a sort of a video. I'm sorry, there's so much information. Let's try to summarize that again. So the first 30 minutes, I don't trade. I identify the direction of the day. So the first 30 minutes brought us to 10 a.m. and I saw higher highs with lower lows, but because we were sitting at the high, I was actually planning for a bullish entry. Now, I don't ever enter until confirmation, so I was watching the option I wanted, which was the 444 call at the morning, and we were trading at 440 at the time. So this is 10 a.m. I'm like, hey, I think I'm going to trade long, so I start to identify that. Now, the 444 call was trading at $1.30 at 10 a.m. That's pretty expensive, considering it went down to 31 cents by 10:40 a.m. Now, we avoided all of that, right? Just by simply saying, hey, I want to enter calls, but currently it's high implied volatility at 10 a.m., right? Why do I say that? Well, look at the relative volatility. It's screaming it's oversold. So now I'm waiting for it to go to a low IV state because I want to play calls. So so this is theta gang winning. They're selling their calls. This is market makers, option market makers, theta gang. They're winning. They're taking retail's money. It's the same game every day. So in the morning, momentum trades. The high implied volatility in the calls with the downward momentum means they're just going to rob these. So lo and behold, they do. It's a 300% trade for theta gang right there. Now, we blew past my entry zone, so I chilled and I identified the trend. And I still wanted to trade long, so I mentioned, hey, look, I haven't taken a single trade yet, and it's almost 11 o'clock. And then I finally saw the consolidation break. So these are the two trends that the bears were trading in today. Seen up here, 1, 2. And as soon as we broke the first, I'm like, okay, I want to enter calls. As soon as we broke the second, I took a call at 0.7. And we ended up closing out most of it around $1. So nothing huge, but small, easy gains. Great. So then what happens, right, is we enter into a new trend. So the trend is now no longer bullish. We're now trading a bearish trend. And as soon as so I entered in at 0.7 on the 442 call, which I'll show on the right here. as soon as that trend was broken, which you can see, look, the trend is invalidated here. It's low implied volatility. Now it's not oversold, but it was 0.61. We entered at 0.7 and we exited the trade around 1.0 when it was peaking at the oversold. Now we did miss some gains to the top side, but that's okay. Now I entered into that same exact trade again at 1.03. Because the RVI, as seen here, isn't in the oversold area, but we're trending up. So this is very indicative of a break to the upside. And why I say this is the put skew is heavier, max pain's higher, and the calls are ready to be ran again. So what you'll start to see is the call won't be oversold on the relative volatility, but it'll be holding its price. So it's holding that 1.03 price, but it's not oversold, meaning market makers and Theta Gang are going to try to drive this up, which you'll see right now. It's pretty cool to do things live. So I'm in this trade. It'll break up right now, and then if it breaks through the resistance here, all of these bearish traders that entered their puts into this range will then get trapped and will impulse higher to the 441 mark. And that's pretty easy to see happening if you pay attention to the volatility. So again, the volatility here is not oversold, right? But we're testing a resistance. So the call volatility isn't oversold while we're testing a resistance. That's indicative that the calls have more room to run before the market makers will start to short and sell the calls. So right now they're still just selling puts at this resistance, and eventually they should go long here, which will impulse us up to the 441 mark. And I'll stay live until that happens, because it usually does. I'm not usually wrong. So anyways, we'll kind of just chill here for a few minutes and see how this plays out. But that should kind of explain in a very chaotic manner what I'm talking about when I say how important IV is. So anyways, if you just look at the price action of the implied volatility on anything on the right for an option, you'll see what I'm saying. You can take these 30% gains all day long if you're scalping quick. I try not to, just because I try to take less trades. So right now I'm still in my second trade of the day. I've currently risked $1,300 and I'm up $400. So not a bad start to the day, or rather I'm about to be up about 400. So not a bad start to the day. And from here we should see a nice push up to hit our 1.33, where most of my contracts will be sold, and then I will leave a couple runners for a move to 444 potentially. So anyways, I don't really draw arrows often. Every arrow I drew last week was hit, so I drew a few today. I see us going all the way to 442.5 minimally. So we'll see how my predictions play out, and let me know how that trade goes for you. There's the impulse up. I'm pretty sweet at what I do. You can be too. Make sure to like, subscribe, and share this if it helped.